We're joined now by Mitul Kotecha. He's head of global Forex strategy at Credit Agricole. So, Mitul, thanks very much for joining us. Are you that pessimistic? I mean, the markets don't seem convinced, especially if you look at the euro since this EU-IMF rescue deal came through.
Yeah, I think the reaction has been very, very lukewarm, to say the best here. There are a lot of risks, a few of them, several risks, including the implementation, execution risks. Certainly, there's a lot of domestic opposition within Greece to the enhanced austerity measures that the Greek government will now have to carry out as a condition of the bailout. Secondly, there's continued contagion risks. Spain and Portugal are still not out of the woods. They have their own fiscal problems. There's also an approval risk. The government in Germany needs to pass this through Parliament, and certainly there's opposition within Parliament. This is going to be debated on May the 7th within the German Parliament. And finally, there is talk or speculation that the 110 billion euros, as much as it is, may not be sufficient to cover Greece's liabilities within the next 3 years. So all of these factors added to the negative impact on economic growth, not just in Greece but in Europe, suggest that this issue could go on for a very, very long time. And in the meantime, the euro is likely to remain under significant downward pressure.
Okay. Now, there's been a lot of talk about a crisis in the euro, about the need to save the euro surrounding this Greek debt crisis. But actually, the euro's been pretty resilient so far, hasn't it? But you say more downward pressure ahead. Give us some more detail on that.
Well, I think it's a fair point. The euro has been fairly resilient. A lot of the pressure through the Greek crisis has been borne onto Greek debt and peripheral debt, and the euro perhaps being very, very resilient. I think this resilience isn't going to last. I think it's very clear now that the pressure is going to increase. We believe that widening growth and yield differentials in the coming weeks and coming months will play much more negatively on the euro. You only have to look at some of the economic data coming out of the US to see that the US economy now is going to outperform Europe. And I think that's going to add to the pressure on the euro. And I think the intensification of concerns that I mentioned just before will put further pressure. So I think near term, 130, 115 is a big technical level to look for on a downside. Then around 129.65. But we still look for euro dollar to get all the way down to 125 in the coming few months.
So do you see this sort of decoupling or divergence between the U.S. and the European economy really being the main driver, with the sovereign debt kind of adding to the growth problems here in Europe?
I think so. I think the sovereign debt issues and the austerity measures will just exacerbate the concerns around Europe, they exacerbate the slowing in growth, but not just a slowdown in growth. I think that's a bit too general. We're seeing a big divergence in growth within Europe. The northern European countries, Germany, for instance, doing actually rather well with its export-led engine, whereas southern Europe, and we talk about Greece, but Spain, Italy, Portugal, doing much, much less well. And I think that's going to add to this divergence. And again, the relative growth gap between the US will widen even further.
Mitul Kotecha from Credit Agricole, thanks very much for joining us.